on this information that I'm about to show you. So how do we measure how much money we need in retirement? Do you know how many people I ask exactly how much money do you think that you'll need annually at your retirement age, goal? They're like, I don't know. All right. So let's just take a look at this. So I just started at 40, since that'll give everyone at least 20 to 25 more years to work until they retire. Just some simple math, right? So I help you figure this out because this is important, because if we're making $100,000 now, what I help my clients realize is that I don't care about taxes. We need to figure out how much you need to live on after taxes and how much your expenses are, right? And so when you meet with me, I help you figure this number out to something that's reasonable. This is just an example. So if you make six figures and you want to retire at 65 and you think you're going to die at 95, right? We need 30 years of non-taxable income to, not necessarily, so that, you can, survive or anything, but mainly so that you can still have your same standard of living. If you want to have your same or equal standard of living, this is what it's going to cost if you live 30 years in retirement. So rule 72. Rule 72 is so key because this is where I come in. This is where I'm different from a broker. Your broker is only going to talk to you about your rate of return. Nothing wrong with the rate of return, but you got to know how to figure it out. Because when you meet with me, I have slides and I'm going to show you a video that shows you how a rate of return can be kind of misleading if you don't know how to calculate it. So basically what I do for my clients is not only do I guarantee all of their income in my particular product, but I make sure, or I see to it, right, that we meet annually and that your income with me is doubling every 4.5 to 6 years based upon Rule 72. All right. So, I mean, right, I've talked all about IRAs, I've given you guys, something, something to mope about. But listen, the tax-free retirement account, the TFRA, this is the good news, is that these accounts, because they eliminate taxation and because they eliminate market losses, they allow for a person that has another 10 years or more to generate 60 up to 40 to 60% more income than they would in a traditional IRA account, right? And so this allows for my clients to pay catch up a lot faster in their retirement, right? Especially if they're behind. Another tidbit that I wanted to add, I can only speak for the state of Missouri, so I would suggest you, get with your attorney and just check this out for your state.